All right, so this video will be posted on my YouTube page. So for anybody that missed this class, you can just go back to my YouTube page and you can just get it. Okay. So now this is what we're talking about. Now I discovered that a lot of people, they're texting me, and the question is, how are you doing it? How are you risking this little pips in the market? And how are you, making your funds from it? Now, the thing is, some set of people would message me that, okay, guy, teach me your strategy. I want to know how to trade like you. I want to use your strategy. But the key fact there is, no matter how many strategy you learn today, no matter the mentor you have, no matter the strategy you know, okay, you're still gonna be left with your own decisions. You're gonna be left with the fact that you have to make your own decisions. Please mute your speaker. Please, where is that? Please do it. Mr. Gibbs, please mute your speaker. So I took my time and I drafted out a trading plan because I feel, okay, probably this is what you guys need. Can you all hear me, please? Can you all hear me?
Yes.
Okay.
Loud and clear.
Yes.
All right. All right, sir. So
yes,
I took my time and I drafted out a trading plan for you guys. And I feel, okay, this is what you guys need. Like, some people are fighting fear. You're scared of losing $10. Some people are fighting this FOMO attitude. You just want to jump into every trade. Now the thing is, I'm not using a special strategy. The strategy I'm using to trade, it's what everybody learned from the scratch, like what everybody knows. But because everybody is busy looking for the best strategy, you ignore that. And once you do that, once you ignore that fact that you have to make use of the strategy, you have to make use of your support and resistance, your structure. Learning all other strategy won't make sense to you because you have forgotten the key. It's just that simple. Now, I'm going to, the thing there is, the reason for this webinar is actually to draft out a trading plan for you. It's not like I'm drafting it out for you. I'm just showing you my trading plan. Now, this to you might be different, you understand? But I feel if you have a trading plan to guide you, then your trades will make more sense. If you have a trading plan to guide you, because I actually had a trading plan to guide me. I won't lie to you because I give the credit of this video to Riz Iqbal. If you don't know him, I think Konzi know him very much. And he has actually helped me grow. He's not a Nigerian, he's I think a Pakistani or something. So I give the credit to him because I actually learned all this from him. So I'll be showing you how a trading plan works and how you can put a trading plan into good use to help yourself in the market. So I'll be sharing you my screen now. Then we'll be talking about each and every trading plan, one after the other. Please, I want this to be an interactive class. So if you need anything, if you have anything to say, just type it out. Okay, I think I know why I can't. You guys can't see me. My camera is on. Can you see me now?
Yeah, we can only see your white page.
Please let me see.
Actually see you.
Okay, calm down. What about now? Can you see me now?
Yes.
Yes, you can see you now. Yeah.
My camera was on.
Kind of,
all right, guys. So let's go into the real deal now. Now, I'll be drafting a trading plan for you. So now this trading plan actually is what I use. So this might be different to you. You know, when it comes to trading, when it comes to Forex, you can have a lot of mentors. You can have a lot of mentors. But the thing is, you are actually left with your own decision when you're about to trade, because you are the one with the phone, you are the one with the profit, and you are the one with the loss. Your mentor won't help you share your loss. Both your loss and your profit. Your mentor won't share any of it. All we do is, okay, we just look up to them. Okay, this is my mentor. Okay, this is who I look up to. Do you understand? But you really need to, get used with the fact that 99, okay, I would say 100% of every decision you make in your Forex trade affects you, either positively or negatively. And that is why you need a trading plan. Now, I'm going to share the white. Should we use this? Okay, let me see. Let's use this. All right, can you all see this? Okay. Trading plan. Now, I took my time to draft out this. Because I can use my this. I think I should use my this instead. My trading view instead.
Yes, yes.
The trading view is much more better. This text and stuff. Okay, now this is the trading view, and this. All right, so this is a trade I took today. It's my first TP. Just I think less than 10 pips left, then it reversed. So I went out with like 20 pips profit. So let me hide all of this, and let me delete all of this. Good. So we have a clean sheet. Thank you, Konzi, for showing me how to do this easily. Like, thank you. I really appreciate this. Now, trading plan. Now, just like I said, this quick trading plan is just what I think I use. Everybody has his own trading plan. Everybody has his own, different means of trading, different guidelines to trade. But this is my own personal guideline, and I feel okay, if you can learn this, then probably you can, actually get more out of your trades. Now, the first thing you need to know is whenever you're trading, whenever you're about to go into a trade, there are things you shouldn't do. There are things you should do. There are things you should know. Do you understand? There are things you should know. Now, I think, okay, for me, the first thing I take into consideration is what my risk management. That's what I do. I use my risk management a lot. And I think that's the first step. That's the first step you need to know. That's the first thing you need to know. Now, the next thing is you have your entry signals. Now, I'll take my time to explain each and every one of this, but I'm just trying to highlight them out. So you have your entry signals. You have your exit signals. You have your what else? You have your structure, but we won't be talking about. We won't be going into charts today. So that's in the next masterclass. We have the structure. We have the positions. We have the emotions. What else do we have? What else do we have? Let's put this together. Okay, I think we have what else? Let me see. Okay, yeah, I think I have them right here. So I'm just going to show you to you. We have, okay, yeah, we have the risk reward. We have the trading sections. Okay. Okay, I'm sharing my screen back now. Coming. All right. All right. We have the reward. Then we have the trading sections. or let me just put it like sections. We have the trading days. Okay, let's have this first. Then if I can remember the rest, I'll just chip it in. All right, now, so these are all what I try to analyze. I try to look into while going into a trade. Now, most of us, the thing that happens to us is we get scared. We let our emotions, come into play. That is why whenever I teach people, whenever I try to teach people and I feel, okay, I've taught you for so many weeks and you're good to go, I tell you, okay, we are blowing 5,000 naira. That's like $10. I let them know. I said, okay, this new week, let's blow $10. You are blowing it. Probably I might be too strict with that, but that is just what I do. I let you know, okay, we are blowing this $10. We are not making profit. Number one, because if you're trading on a demo, if you're trading on a demo and you're having this good win rates, trust me, you're not trading yet. Because once you start trading, once you start trading the real account, you have to deal with emotions. You have to deal with your emotions. You have to fight your fear. You have to. If you can't fight those two things, trust me, you're going nowhere. Just keep blowing your account. Now there's a guy I taught, I think patience, we have patience too. Okay, patience can be under this. Now there's the guy I taught recently, and the day he started trading, he was like, Dre, I want to fund. And I was like, okay, yeah, fund $10. After a series of classes, and he has been doing good with his demo, and he funded $10. And I was like, okay, this $10, we are blowing it. He said, yeah, he knows. So the next week, he was able to raise the $10 to $120. And I was surprised. I was like, wow. Like, I was so surprised. Then the following week, he blew the $120. You ask me why? He blew it because there's something about trade. Whenever you need to know how to handle both your winning streak and your losing streak. There's this spirit that comes inside of you when you're having a very good time in trading. You're winning a lot of trades. There's this spirit, and when it comes to you, to tell you increase your lot size, to tell you add many positions. Then before you know it, you start blowing the account. Last 3 or 4 weeks, I built a $10 account to $400 account. This new week, I'm taking a challenge to build a $3 account to $400 account. But the market is very slow, so I'm still having issues with that. But I'm going to be working more on it. So trading plans. So let's talk about this trading plans. Okay, let me see if I still have one more I jotted down. Okay, let me see. Okay, pairs. Yeah, the pairs you trade. Okay. I think that's the last one. Okay, let's have the pairs here. Because pairs. Okay. Good. Now let's talk about this. Now, risk management. Now, okay, everybody knows it. Okay, what is the risk management? You know how to risk, what they ask you. When you go to a trade, what do you think of? I ask people, what is your risk per trade? When I'm asking you, what is your risk per trade? I'm not asking you for your lot size, but most people tell me, okay, I use 2 lots, I use 50 lots. No, I'm not asking for your lot size. What is your risk per trade actually means how much you're willing to risk in that trade. How much you're willing to risk in that trade. Now, there's something that is certain about Forex. Profit is not certain. Don't let anybody lie to you. Profit is never certain in Forex trade. But there's one thing that is certain, you will lose your money. Trust me, if you can go on with that mindset that, okay, this is certain, I'm losing this money. Let me just try to minimize the little amount of money I want to lose. When I go into the market, I look for a good position to enter my market. Then I know, okay, 10 pips, I'm losing $10 in this market. I'm losing $15 in this market. If I'm stacking, if I'm stacking, if I open 5, 6 positions, okay, I'm losing $60 in this market. You need to know. You don't have to start seeing your market go to $300, $400, $500 before you decide on, okay, I'm closing this market. No, you need to know your risks per trade. Now, this risk per trade can be in various forms. Okay. Now, talking about risk per trade, we are talking about risk management. We're talking about risk management. We're talking about your risk per trade, how much you're willing to lose per trade, your risk going against the trend. Now, talking about this, I'm talking about going against the trend. I mean, probably you're trading, the market is not uptrend and you're trading against the trend. That means probably you're trying to, okay, the market is going up and you see a break of structure and you enter the sell and the market is going in an uptrend. Now, you know you are trading against that trend. How much are you willing to risk before you go into that trade? You should have it in your plan. Not that it is when you jump into trade, you start seeing loss and you start complaining. You have to get used to the loss, get used to the reds. That's what I said. I tell people you have to get used to the reds. Now, risks trading it's the trend. The market is an uptrend, you're buying, and the market is coming in your favor. But what about if the market goes against you? How much are you ready to risk? How much are you going into the markets with? Okay, you need to know. Now, handling your winning streak. Okay, I think that should be in the emotions. Let's just have this 3. Your lot size, your positions, it really matters. Now, probably you have a friend or you have a mentor that opens 6 positions, and you that you're probably you're a newbie or something, you want to copy. That's very dangerous, you know. Now, the person opening 6 positions, you don't know what he has calculated. You don't know how much he has in his account. That is why I keep saying, you know, whenever you're trading, you should understand the fact that even your mentor doesn't know what is happening to you. You're the one, okay, if you blow your account, you'll be the one to go with the emotional, the rail, the tears. You'll be the only one to fight it. Back in the day, I could remember when I was crying, I was shedding real tears. I blew 300 and something thousand in your account. That was my last card. Like, you know, I did subscription to all these various signal groups, and they just give you 50 pips. They give you 200 pips stop loss. I'm telling you. So you need to know all of this, your risks. Like, that's the first important thing that you need to know. Okay, so I think we're done with this. So let's talk about our entry signals now. Now, talking about entry signals are just basically talking about when to enter a market. Now, everybody has a different strategy to enter a market. This is where your strategy comes in. Everybody has a different strategy to enter a market. That is where you hear people saying, okay, I use FIB. You can have, let's see, you can have FIB. People use FIB. Konzi use FIB a lot. I don't know how to use FIB because I don't know. I don't really like it. So Konzi is even trying to pull me through. I don't like FIBs. Now, you can talk about the Queen of Pips strategy. That is QP, Queen of Pips FX. Talk about my own kind of strategy. Talk about the structure. I use this a lot. We talk about the S and R. What else? You can just please give me ideas. I want this class to be an interactive class. Come in. Give me those strategies you use. So you have the horizontal strategy.
To break and retest.
Yeah, that's the structure.
To break and retest.
That's the structure.
Demand and supply.
Demand and supply. Good.
Market maker strategy.
You saw what?
Fibonacci expansion.
Okay, let's just take that as Fib, demand and supply. I use demand and supply a lot too. So what else do we have?
Trend lines.
Trend lines. Yeah, thank you. Trend lines. We have candle formations also. Time frames. Yeah, have time frames.
We have divergence.
Ah, that be boy. You said what, sir?
Divergence.
Okay,
Market
divergence.
divergence.
Okay, divergence. Okay, we have divergence and we have okay, I think that's enough. We have time frames. Now when I talk about all of this, all I'm talking about is what? The entry signals. What you take in, what you look at before you enter your market. Now talking about Fib, I think Konzi said when the market gets to 50.0 or I think 62.8 or something, that's where you get a good entry. I don't know, I can't remember. So I think Konzi said something like that. Now talking about the QOPFX, we're talking about the pivots, the pivots line. If the candle closes below, you sell. If the candle closes above, you buy. Those are your entry signals. The structure. Talking about structure, I use structure. So talking about structure, we're talking about breakouts and retest. Simply. Support and resistance. Understanding your support and resistance, we're talking about what? The floor and the roof of the market. That's a simple definition. Horizontal strategy, you need to draft out the horizontal lines and this thing when the market closes, just like the Queen of Pip strategy. Demand and supply, whatever you have a huge market movement, you pick out your demand and supply from, so on and so forth. Trend lines, breakout of trend lines, candle formation, your time frame. All of this are what you take in place before you enter a market, what you consider. You take your time, you consider all of this, then you go into the market with this mentality, with this plan. Take Forex as a business plan. You know, there's this mistake I did when I was going into Forex. I was like, yeah, I can easily make quick money. And boom, Forex, Forex, took me out. And I had to sit down and I would think. And I started practicing. And I drafted out all of these plans and I took them, each and every one of them, into consideration. So if I ask you what is your risk per trade, you won't tell me your lot size. You tell me how much you're risking in the market. Understanding lot size also really matters, because I think I did a class a few days back and I was trying to talk more, emphasizing more about lot size by asking questions. With your lot size 0.10, you're risking 10 pips in the market. How much are you risking? That means you're risking $10. With your lot size 1.00, you're risking 10 pips in the market. How much are you risking? You're risking what? $100. Now, all of these are what you need to know. You can't just pick a lot size, then jump into the market. Boom. No, you need to work according to a plan. You need to have a plan that is guiding you. Work with that plan. That is how you learn. Now, because there are these things most people do. Now you have a trade. Okay. For example, let me just make use of the Queen of Pips. Probably she called the signal for you guys. Okay, sell so stuff at so stuff. Or probably she has actually entered the market before you guys and she drops the signal. Now, as a Forex trader, the first thing you need to do is not to jump into the market. Don't make that mistake. You have to calm down, check the market, analyze the market. Everybody has a different opinion to the market. I might be having a buy signal, you're having a sell signal. This meeting now has unlimited. Okay, thank you. Are you getting me? Please, if you understand me, just say something.
Yes, sir.
Yes, we do.
All right, thank you. So that is what I'm trying to talk about. Now, for example, okay, I'll use Konzi, for example. Now, I and Konzi, we did an analysis on markets. I think that was last week or so. And I got in before him. So probably he tried to jump in later on, but the market reversed immediately when he jumped in. And I got in at a very good spot. I was able to, leave out the trade with some profit, but Konzi wasn't. He has to lose that trade. And that is why I said FOMO comes in. You don't need to jump. You don't need to rush into the market. If a market leaves you, leave it alone. You have other opportunities. You have thousands, countless. You don't need to jump. You don't need to chase after markets. This morning I had a GPP, JPY. Okay, I showed you the trade. Okay, I showed you the trade before. I deleted it. I had a trade on GPP, JPY, and the market. So yesterday the market was buying. So I was like, I'm not buying this market. If I buy this market, I won't have a good stop loss. And I'm that kind of person that I use crazy stop loss. Now I use 2 pips in my trade. That is, I'm risking $2. If I'm using 1.00, I'm risking $20. That is because I wait. Sometimes I take trades 2 times a week, once a week. And when I get the profit, yeah, I'm good, I'm contented, I'm okay. We move. You should actually get to understand the fact that if you take Forex like something that, okay, I'm going to make millions daily, that is when you keep losing. If you keep chasing the market, you keep losing. If your setup is not complete, leave the market alone. You don't have to rush. There's always another time. There's always a different pair. Now, fine, we're done with that. Structure, we all know what structure is, breakout or text structure. This is my own. Your own can be different. I'm actually putting this because this is my method, my strategy. Now, talking about positions. Positions. What do you understand by positions? We're talking about what? Your lot size. Talking about your lot size. We're talking about your stacks. People stacking. People stack. You don't have to stack if you don't understand the concept of stacking. Talking about your positions. Now, I was talking to a guy. I gave a guy a signal this morning. GPP, JPY. I was like, okay, bro, buy GPP, JPY. It's tested. Buy GPP, JPY, and he bought. He opened 10 positions. Do you understand? I'm sorry. He opened 10 positions, and the market did. This morning, the market did like 30 something pips. I took 20 pips actually because I wasn't expecting that retracement. The market did 20 something pips, 30 something pips, and it did not close any till the market retraced back to where it started from and put him in a loss. Now, this is where I'm coming from. Positions, if you're stacking a trade, if you're stacking your trade, opening a lot of positions, trust me, you don't have to wait. Opening a lot of positions, you know you're going to the market to take 10 pips, 20, you're not going to the market to take 100 pips, so you're scalping. That's what you need to know. If you're opening 12, 13, 14, 15 positions, you don't wait for 100 pips, my brother. If you get 10 pips, mama come out, like leave. Now, if you're going to copy my kind of trade, my style, you will notice that if I'm scalping, I open 6 positions. If I'm going for a normal trade, I open 2. Now, going for a normal trade in the sense that if I'm swinging, like I'm swinging that trade, I open 2. I don't do 2. Okay, I know, okay, yeah, my mind is at rest. If the market goes against me, okay, I'm risking $100. Those are things you need to take in place. Now, if I tell you that, okay, bro, fund $10, let's blow it. Now, me telling you that let's blow it, trust me, you won't even get to blow the money. If you follow my kind of trade, the way I do my things. Oh, I'm sorry, I think I pressed something. Okay, stop. Okay, where are we? Okay. Now, because if you're using a $10 account, you're trading with 0.01, you're accepted. And your lot size is 0.01, so your lot size is 0.01, and you're risking the 10 pips. That's like how much? You can answer the question.
$1.
Exactly. You're risking $1 in a trade. Now, if you take 2 trades a day, you lose the 2 trades. That's $2. You don't continue. Now we'll talk about that when we get there. If I take a trade, if I take 2 trades and I lose those 2 trades in a day, I'm done. I'm done for that day. I'm done. Now this is where you guys make this mistake. You take so many trades, you keep losing, then you keep bringing back the emotion to keep losing. You try to revenge. And when you keep on doing it, you keep on losing that money. You shouldn't do that. When you lose a trade, you actually take your time. Take your time off. Like, leave there. You know, sometimes you have to take your eyes off the charts. Just go out, have fun. There was a time I took a trade. I lost. I used 0.10, so I opened 5 positions. I lost $50 in the morning. So I just took my phone. I called my friend. Okay, I'm coming over to your side. I went there. And when I got back later in the night, I saw a buy opportunity in that same trade. And I caught, I think, 60 pips. $10 profit. Now, I opened 5 positions in the morning. I lost $50. When I go back, I opened 1 position. 0.10. I caught 60 pips, $60. Remove my 50 pips loss. I have $10 profit. I don't think you understand what I'm trying to say. Now, I didn't take it with the fact that, okay, because I lost this trade in the morning, okay, let me add plenty lot size so I can get enough money. No. The thing is, you need to understand the concept of Forex. You don't really need to chase. You don't need it. Like, there's something you need to know. The Forex market deals with your psychology. The Forex market knows your next move. It can read you. I won't lie. The market reads you. It understands you better than you do. That's when you say, okay, I won't say, okay, I lost this in the morning. Okay, let me double up so I can make up my loss. No. If I had done that and the trade had gone against me, you see, it's a double loss. But no, I actually used a smaller lot. Okay, I was able to pay back my debt. If you can make $1 in the Forex market a day, bro, it's something. I'm telling you, it's something. If you can make $1 without making a loss in the market, it's something. Because your friends are making $300, $1,000, doesn't mean you should kill yourself. I have a friend that makes 20K, 20K, 30K. It's a friend of mine. Does that mean I have to do what he does? The lot size he used, they don't bomb me with. Shake it. So these are things that you really need to understand. Positions. So I think we're done with positions. So let's talk about emotions now. Now, talking about emotions, we're talking about how to handle your winning streak. And we're talking about how to handle losing streaks. Patience. What else? Fear. I think we can classify fear under emotions, right? Fear, emotions. Yeah, I think so, right? I think having a hobby is in the aspects of have we spoken about exit signals? We haven't, have we? Have we? Hello?
No, sir, we haven't.
Okay. Okay, we'll talk about now. Now, this is emotions. Okay, let's just talk about emotions. I actually missed that. Let's talk about emotions, then we'll go back to our exit signal. Now, talking about emotions, what we're talking about is how you feel. How you feel. How do you control how you feel? Now, there's this thing that happened. Okay, I won't lie to you. Even despite using 10 pips, 8 pips, 2 pips, stop loss, I still find myself going to check my trade. Like I still find myself going back to check my trade. Okay, yeah, I'm making profit. Okay, yeah, I'm making loss. Why? I think probably, okay, that's nature for me. Even despite managing my risks, I think that's just nature for me. But have you ever thought about how you feel when you're winning a trade? You're in a trade and the trade is running over 50 pips. How do you feel? You feel, yeah, I've arrived. You feel unbeatable. You feel, them dead. If I catch 200 pips in markets, like I'll be like, them dead. Nobody bunu. Yeah, I'm serious. If I catch 200 pips in the market, that's how I feel. I feel, oh yeah, I'm good. Yeah, I'm unbeatable. You know, these are things you can't get rid of. These are your emotions. All you have to do is just get balanced. Now, thinking about this, now we're talking about, okay, how you feel while winning the trade. Now let's talk about how you feel while losing the trade. How do you feel? Evelyn, how do you feel while losing the trade? Evelyn? Are you there? All right, I think Evelyn is not there. Evelyn, are you there? Sir Collins, how do you feel while losing the trade?
Bro, sometimes I feel scared and nervous, but I'm
Yeah.
getting used to it right now. I
Yeah.
do face the market. My mindset right now is if I lose, I lose. If I win,
You
I
win.
win.
Okay. Okay. Let's see some other person. Yeah. Papa, how do you feel when you're losing the trade? Papa.
Yeah, I'm with you.
How do you
So
feel?
I feel afraid of losing my money.
Thank you for that. That is where we have issues. We get scared. Yeah, I'm scared. I don't want to lose this money. I don't want to lose this money. I don't want to lose this money. A friend actually tested me, I think 2 days ago, and it was like, yeah, this guy is a great, like, what I'm talking about, I personally, I know he's a good trader. I'm telling you, but he hasn't gotten over the emotion part. That is why I say don't get too used to your demo. It's not good. If you get too used to your demo, it's very, very bad. It's a very bad thing. Trust me. You shouldn't trade demo for too long. Trade demo 2-3 weeks, 1 month max. Stop it. It's not good because demo won't show you what you need to know. You can use 100 position on your demo. Can you try it in your trading account? No, because you'll be scared. You don't want to blow it. You don't want to blow it. That is why I take my time. I tell my guys, once you're done trading, 3 weeks, we're going to blow $10. Now, if I give you that mindset, I tell you, look for $10 that you know you don't need because we're blowing it. So when I tell you that, and you actually come up with the $10, 5,000, and you go to the market, you have removed your mind from profits. My advice to everyone, like if you want to go into your trading account, just try it, $10, 5K. Look for a money that you don't really need. Then test your emotions, test how you feel, burn that feeling. You need to burn it. Like you really need to burn it. How to handle your losing streak. Now, when you're losing, you don't have to feel bad because losing is part of the game. Yesterday, did I take any loss yesterday? No, I didn't take any loss yesterday. Did I take any loss? No, I think I didn't take any loss this week. I hardly take losses though. I hardly take losses. That's just one thing about me. If I'm gonna lose a trade, like when I'm talking about loss, I mean lose like normal lose, $10 loss. If I'm using 0.10, I won't lie. But like there are some times that okay, I feel okay, this trade is not going to work out, and I close it manually. Now, we're going to talk about that when we talk about the exit signals. Losing is part of the game. No matter how much you lose, you shouldn't feel bad. Yeah, you know, that is why Forex is actually meant for money that you're not using. Don't go and get loan. No, don't do it. Don't do investment scheme. Please don't do it. I beg of you. No matter how good you are, please don't do it. You're going to regret big time. Now we're talking about patience. Now, let me tell you something. Forex markets, now patience person get Forex market. You have to see, if you're not patient, they will take your money and give it to the patience person. You have to be patient. That's the key. If you're not patient, go and learn it. That's what I'm telling you. See, you don't have to jump into every trade. You don't need to. You don't. The day I built $10 to $400 in 3 days. It's just one trade. 2 positions. 2 positions. GBP, JPY, 200 pips. Now, it's not like I didn't see the buy. It's a sell. I saw the buy. But I wasn't comfortable with the buy. You know, there are some trades you see that, if I jump into this trade, my stop loss will be high. Why not wait for the trade to come meet you where you want the trade to come? Then go in with a small stop loss. Everybody marvels. Oh, yeah, that you have a very good entry position. Your entry is top notch. Fine. I wait. I do a lot of waiting. You to do it. It won't kill you. It won't. Wait. Let the market come. Validate your setup. Get in. This trade I took this morning, what I was expecting was a sell. Now, I wish I didn't delete that trade. Okay, I think I can still show you. Calm down. Calm down. Can you all see my normal screen?
Yes, we can.
Yes, sir.
Okay, all right. I'm not used to the system already. I just got it. So tonight can be okay. This I think the trade is somewhere here. Good. Now this trade was the one I took this morning. Now I was expecting a sell. You could see my stop loss. I was chasing 200 pips. I was expecting a sell, but I don't jump into trade until I see the reaction on this FX zone. Now look at where my entry is. Now until I see that reaction,
I'm not seeing
Sir,
your
hello?
screen.
We can,
Hey, we
we
can't
can
see
see
your
your
screen.
you can't see my screen
We
again.
can
Abi?
see the chat.
Can't see
You
the
can't see
chat.
chat.
We can see your screen.
Yeah, we can see the chat.
Okay, your screen sharing is paused. Okay, let me go back first. You can see the chat now.
We are just seeing everything that you wrote before, no chat yet.
So they don't want us to check. Fuck. Pay me, sha. Okay, I think I sent it to some people. I think I sent it to some people. I think I sent it to Konzi. Konzi, it's like I sent you a chat this morning. Konzi, are you there? Konzi? Konzi is my trading partner.
You sent me one chat this morning.
Yes. I want to check the chat. Sir?
You sent it to me. Should I send it to you?
I think it's in the group. It should be in our chat now. It's not there.
Check my own, Raphael.
Okay, Raphael. Okay, thank you. Let me check, Raphael. I sent you a message this morning now. Just now, Seth.
Yeah.
Hello.
Sir.
Hello, Matt.
I'm with you, sir.
Nakuzi, I quickly went
Okay.
to pick something.
All right, no one. Okay, yeah, I can see it's in Raphael's this. Raphael, thank you so much. Now, this is what I'm trying. I think I sent it this morning. Okay, this is yesterday. Okay, not this. Now, not this, but let's make use of it. You can see this one, right? You can see this. Can you all see this?
Yes, you can see. Yes, you can see.
Now, good. Now, when the first chart I was showing you, my entry was around this zone. But I waited for the market to react to this zone. And when the market got there, the market broke the zone above. So I was like, okay, this market, you don't break my structure. What am I looking for? I'm looking for what? A buy. Because market will break my structure. So because the market broke my structure, I wasn't jumping into the trade. I waited for the market to retest that zone, and I did this. I had my first TP here, up here, then my second TP to the last. That is the last candle there. Do you understand? And funny enough, market to my first TP, it was remaining 10 pips left for market to get to my 10 first TP, and it rejected. So 30 something pips, I think there's 7 pips then they gave me 20 pips profits, and I exited the market. So that's what I'm saying. I actually wait for confirmation before I jump into my trade. Sorry, please. Sorry, sir. Thanks, sir. I'm sorry about that, guys. So I think, how do I go away from here now? Okay. All right, guys, can you see my screen now?
Yes.
All right, good. Now let's talk about now we're talking about patience. Now, patience is what? Patience is the sense that you have to wait for what the market to what come do what you want. My entry was 10 pips this morning. I can do 10 pips more than 30 times a day. See, 10 pips, 10 pips, 10 pips, nothing more. I don't use 20, I don't use 30, I don't use 50. Most of you use 50. Then you keep on checking your loss. Yeah. Then you keep on giving yourself issues. You don't need them. You don't. If I'm going to use a bigger lot, let's say 15. I was talking to the Queen of Pips today. She asked me to share some screenshot of my trade, and she was like, "Wow!" Like she was amazed with my entry, my stacking positions. That is just, you really need to work more on your entry. Now let's talk about exit signals before I forget. Now, exit signals. When we're talking about exit signals, we're talking about what? We're talking about when to leave your trade, when to close your trade. We're talking about partials, taking partials. We're talking about break even. We're talking about what else? Please talk to me, guys. Talk to me. What else are we talking about? We're talking about exit signal. We're talking about time frame. Time frame to consider when watching trade. Time frame to consider. Okay, let's say time frame to consider. What about, please talk to me, guys. I need you to talk to me. When you want to exit your trade, when you are planning on setting stop loss, what do you consider?
Sir, I think we can use consider like using Fibonacci expansion.
P, thank you, sir. Who else?
The news.
News, yeah, but I wouldn't like to put it here. I would like to put it here.
So
Okay,
what about time?
Time frame. Yeah, it's there already. Time frame. Let's just leave it that way.
Time.
Oh, okay.
Profit.
Okay. Yeah, you can use that.
Stop profit.
Yeah. Sir, that's break even. You can put it on break even or stop profit. No, we're not talking about that. Now we're talking about trading times. I think that's enough. Now, when to close your trade, when you're talking about the entry exit signals, you're talking about when to close your trade. Why? Why should you close your trade? And when should you close your trade? Now, basically I make use of structure when I'm placing my stop loss. I'm going to placing my profit, my CP. Now, placing stop loss using structure is I identify the next structure that price might want to test. Now, if I identify my structure, then I put my stop loss above that structure, that if price should break that structure above, trust me, it's not coming down again. It's going up. I've given so many people signals and they tell me, can I adjust stop loss? I say, bro, if price should hit that stop loss, there's nothing bringing it down again. And it happened. You have to know when to close. There are some trades that okay, for example, you're selling in the market, and you get to a point, you see markets, rejects, like you see a lot of weeks. Market was touching that support and rejecting. You don't need a soothsayer to tell you that the market is about to buy. Close your trade. You don't need it. You're buying, markets get to a point and start rejecting immediately. You don't need a soothsayer to tell you that, okay, this is a strong resistance. Close, just like I did today. The market took me to 35 pips. I had to close in 20 pips because I was like, okay, I identify another support. I put my stop profits. If market breaks below this, it's coming down, which it happened. All these are what individual, you have to sit down to identify all of this. I won't be the one to identify them for you. I'm just telling you my trading plans. You'll be the one to sit down, think about all of this and think about how it's going to work for you. Think about how you can twist all of this to work for you. That is how to trade. Now, we're talking about break even. When do you put break even? Somebody was talking to me one time like that. I was like, hey, Dre, what's up? How do you use your break even? When do you break even the market? And I was like, okay, if I'm swinging, when my market gets to 30 pips, I break even. 40 pips, I break even. But if I'm scalping, I trail my stop loss. I don't leave my, if I'm scalping, I open so many positions. I open a lot. Let me show you example. Let me see if this piece. I think I still sent it to her. You can all see this trade, right? You can see this trade.
Yes.
Now.
Yes, we can see.
Now, good. Now, see, I didn't scalp in this trade. You can see I only opened. Somebody should mute the speaker, sorry. Now you can see I didn't scalp in this trade. I only opened what? 2 positions. And you can see how it works. And when I got to another zone, I opened another 2 positions. I didn't scalp. Now this is scalping. This is not even scalping. Calm down. This is scalping. See my entry? I won't stay long in this market. I won't. I'm waiting for the market to get to the support here. If it doesn't, if I see rejection in this side, I leave the market. I don't. It's a scalp.
Can you make your screen the main screen? Is your face that you're seeing as the main screen?
You can't see the screen, Abby.
It's in the smaller window. What is in the bigger window?
No, you just have to click on that perfect
Exactly.
Where?
that screen. It's not the one. It's you guys. It's not the tutor.
Okay. Thanks. I've done so. Thanks.
Okay.
Fine.
Now, good. Now, what I'm trying to say is, now see this trade. This is a 5-minute trade. You can see my stop loss. My stop loss is, I think, I used 11 or 13 pips or 12 in this trade. That was the stop loss I used. And why is because I was expecting the structure to get broken above here, this side. And luckily for me, now see my entry. You don't expect me to use a lot of this 1.00 in I open it in 6 places. You don't expect me to cash a 50 pips or 100 pips with this amount. This is 30 pips profit. I left the market immediately. That is stacking. That is stacking. You don't really expect me to use a huge amount of a huge amount of positions and expect me to wait for 30 or 40 or 100 pips. Or I can even still do 30, 40, 50. 100 pips. No, it's not possible. It's not. That is the mistake most of you do. You open a lot of this thing, then you expect to catch 100 pips. And you know your account can't carry it. If anything should go against you, trust me, you're gone. All these mentors you follow, all these people you follow online, I'm talking about, okay, Sean Lee doesn't scalp. I'm talking about, what was his name? Forgotten his name. They scalp. You see them having 60,000 profit. What's his name? This guy, this popular guy, what's his name? I've forgotten. He opens 15 or 20 positions 20, 30 pips is out of the market and use 10 lot size. You don't expect him to open all those positions and expect to get to 300 pips. It's not possible. If you're looking for 100 pips profits in the market, you open 1 or 2 with proper risk management. Now, no one will tell you all of this. They will just want you to blow your account. Now, when we're talking about time frames to consider, what time frame are you watching to check your trade? Are you checking the 5-minute trade to close your trade, or are you checking the 1 hour to close your trade? When you're talking about FIB, COSI, we're talking about when to, you know, I know the drum now. I'm not sabi use them. Okay, I think you can. I don't know how to use that big. Then trading time. Now, trading time. Some people don't like trading when it is past 6 o'clock in the night or when it is past 10 o'clock. People like me, I don't like it. Trade from morning to evening. Stop all your trade. It will come and be trade loss. I don't really do it. So these are things you need to consider when you're considering your exit signal. Now let's quickly go so we can round it up. Now talking about we have a risk reward. How much are you risking to get how much? How many percent are you risking to get how many percent? You shouldn't be risking more than you're getting. Now, I told you I've been involved in a lot of signal groups and I've gotten into some signal groups that they risk 200 pips to get 200 pips. That is very stupid. And I was blind then. I never knew. I was busy taking it. How can you risk 200 pips to get 200 pips? That's very stupid. So it means you're risking, maybe if you're using 0.10, you're risking $200 to get $200. That is not a good risk to reward. Very, very bad. Compare me risking $10 to get $200 and risking $200 to get $200. That's how most of you blow your account. That is how I blew my account a lot of times. There was somebody, he used 80 pips stop loss. I used the signal, I placed my trade, I took back. When I got down, I saw $80 loss. I was like, one position. Then I had like $500 in my account. I was like, henceforth, I won't use it. I swear to God who made me. I deleted all the shit. How can you use $80 to get 25 or 50 pips? How? Why? That is why my signals are very expensive. I won't lie to you. If I'm giving people signal, I tell them, I charge 50K. I charge 50K per signals because I will give you signal, you're going to use 10 pips, 10 fucking pips to make money. If you're going to lose your money, you're losing $10. Very simple. I tell you when to close. Once I cite that rejection in the market, I tell you close that trade now. Market is coming down. So it's left to you. All of these things are things you need to take your time and draft out. To become a better trader is not a day job, like you just wake up to it. My score for FCMO was, I think, 89 or so. My win rate was 89%. Like 89%, bro. Just try to imagine how almost perfect that could have been. I'm thinking of taking it again. Maybe I'll start maybe next week or so. So we have our sections. We have our trading sections. We have the New York, the Sydney, so on and so forth. Some people prefer to trade during the New York time. Some people prefer to trade during the Sydney time. You just have to look for a time that is best suitable for you. Then trading days. Now, trading days, when you're talking about trading days, we're talking about what? When you trade. Some people trade in the morning. Some people don't trade on Monday. I don't like trading on Mondays because Mondays are always very slow. Mondays are very, very slow. I don't like trading on Mondays. I love trading on Friday. Now, what is working for me might not work for you. Some people don't like trading on Friday. They like trading on Monday. You have to take your time. Identify those trading days you'd like to work. All of these things are things you should put in place. You should not just jump into trading. Take your time. Bring out a book and Bible. Jot down all of this. Write them down. Identify them. Know where your error is. Know where your problem is. Try to adjust in that line. And you just see yourself, getting better daily, getting better daily. Now, lastly, we talk about pairs. Pairs, what pairs are you trading? We have different pairs. I was a lover of gold then. I was a lover of gold. Like, I make a lot of profit. My first big profit I made from gold was $374 or so. That was my first big profit from gold. Within 30 minutes, I was outside. I was just in my balcony. I was trading. And in 30 minutes, I had $356. Boom. I was like, what the fuck, you know? And since then, I fell in love with gold and I started trading gold and I started making profit. And I took my account from 700 to 17. And one single day, the inauguration day, begin. I was trading. I waited for a trade for like 4 days on gold. I was trading only gold then. I wasn't trading GBP. I wasn't trading any pairs, just gold. I waited 4 days for that trade. I was so comfortable. You see, there's this spirit. If you have this, that's why I said, once you discover that you have this great winning streak, there's this confidence that will come into you. Please kill that confidence. It's very bad. It's very, very bad. I was so comfortable with my trade. I took a trade. Like, I was so comfortable. I took the trade without stop loss. I was like, there's nothing. Trade it was like 100% sure. I gave it out to my friends. I gave it out to all of my friends. And this trade did $256 profit for me. And I did not close it. $256 profit using 0.15. I did not close it. I did not use stop loss. I dropped my phone at home. I was like, I was making mouth. I was making mouth. This trade. Them dead. Good. Them dead. I dropped my phone at home and
That's how bosses roll.
I went out. When I got back, bro, I met $400 loss. That was the most biggest loss I ever took in my life. $400. I was like, from 17 all the way back, 17K, $1,956 all the way back to 116, I was shattered. I was confused. I was scared. Then emotions got me. I got so scared. I could not place trade again. Like, I could not afford to see $1 loss again. What did I do? I had to go out. I had to call my friend. I could not place trade for like a week. I was scared. If I see $10 loss, I'll be shaking. Like, I'll be shaking. Like, I think that never happened to anyone before. It happened to me. I probably because that was the biggest loss I took. That was my biggest loss. I was shaking. So I had to go to a friend's place. I spent like a week there. I played, I had fun with him. Then I went back home, like after a week. I didn't stay. I didn't even look at chat. I was like trying to get that stuff off my memory. So that is what I want to. That is what. Fresh. Hey, please mute your speaker out. Fresh. Evelyn. So after that day, I had to go, and I had to, I stopped looking at some chats. I didn't even take trades for like a week. Then I went back home, and then I was able to overcome that pressure. Now, talking about our this is where it comes into place. Having a hobby, it is very necessary. When you're having you're losing a trade, you lost a trade, you shouldn't just leave the chats, go away, like go out, have fun, watch movies, play, call your girlfriend. I'm serious, it helps. Because if you keep staring at that chat trying to get revenge, you keep on hurting yourself the more. And you find yourself losing the more. So, guys, I think these are all I could actually draft out concerning a trading plan. Now, all of this might be different. You might have a different meaning to all of this. I don't know. But these are things I actually put in place when I was trying to learn. And it really helped me. So I don't know if you would like to take all of this into consideration. It might be of help to you. It might not. We can't tell. But I wish I could share you. I just wanted to share you all of this. Now we are going to be taking 5 master classes. This is the first one. We have just 4 more left. Now, I'll take my time to tell you everything you need to know, and we'll take our time to work more on the structure, and we'll take our time to perfect more on trades. So if you have any question, please ask before I close the group.
Good evening.
Yeah, good evening, sir.
Yeah, please. You were talking about positions. Like, I actually didn't understand what you were trying to say about positions. So can you please just give me a clue of what you're trying to say about it?
Now, when I was talking about positions, I was talking about your lot size. I was talking about how many positions you're willing to place if you're buying or selling the market, considering your risk management. How much are you willing to risk per each position? How much are you willing to risk by using one lot in the market? If you're using one lot, how many pips are you going for? How much is your risk per trade? That's what I'm talking about. If you're stacking, can you handle the pullbacks? How many positions are you willing to use to stack? If there's pullback, can you handle it? Can you take it? If you're stacking with 0.10 and you open 5 positions, if there's pullbacks, if you're using 20 pips and there's 10 pips pullback and you have $100 in your account, the fear will make you close the trade in loss. Do you understand it now, sir?
Yeah, I do. Thank you so much.
All right, sir. Please, who else has a question?
Sorry, boss. I have a question. Hello?
Yeah, I'm with you.
Okay, please, can you kindly explain, there was something you mentioned during the entry, the different type of entries, like candle formation. Can you explain it? Is it as the candle is forming, then you take your entry point at that candle?
Now, okay, I understand. Now,
target?
candle formation. When talking about candle formation, we're talking about all this the bearish engulfing, the bullish engulfing. If you see a bullish engulfing, what it's telling you that what is going to happen in the market. The market is about to buy. If you see a bearish engulfing, it's telling you that okay, the market is about to sell. Now, these are candle formations. They are entry signal. If you see a teaser, I think teaser top and teaser bottom, you know what it means. If you see a doji, you know what it means. You have to take your time to identify all of these candles in the market. Okay? Do you understand what I'm talking about?
Yes, boss.
Well,
sorry, another question again.
Okay.
Sorry, last question. Yeah. Okay, let's say I've made my analysis now and I'm going to sell. You understand? But I missed my entry and it's still selling. At what point can I enter?
All right, good. Thank you. Thank you so much. Now, that's a very brilliant question. That's why I made example of me, I and Combsy last week. Now, if you make your analysis and you missed the entry and the market is selling, you don't need to just, you don't need to say, but you missed and do this FOMO. Now it's called FOMO, jumping into the market. And you just immediately jump in. Now, it might be when you jump in, the market retraced. It might retrace though, like just normal retrace, but you think, maybe market is in buy and you exit in loss. No, you have to wait. You have to wait for a break of structure. You have to wait for so many things you have to wait for. Candle formations as well. Check your time frames.
Okay.
Now, if you, for example, you're selling, you mix the entry and price got to a support. Listen, you're selling, you miss the entry, price got to a support. Now, before you enter that sell, you'll be waiting for what price will break out that support, retest, then you enter your sell confidently. Not just jumping. If you jump at the time price is heading to that support, you are guessing. And it is very risky because if you don't wait, price might just go back against you. And two, if you have to wait for candle formation, closure of candle time frame. Sometimes before you enter your market, you have to wait for the closure of 1 hour candle or 4 hours candle. You have to wait. It happens. Those are the things you have to take in consideration when entering the market. Because there are sometimes I tell people that, okay, I will enter this market by 9 o'clock. Now, this 9 o'clock I'm saying is not maybe time session. No, I'm talking about 9 o'clock, maybe when 1 hour candle close, or maybe I'm talking about time when 4 hour candle will close. Are you getting it?
Yes, boss.
So any other question, please?
Can you hear me?
Yeah, I can.
So I wanted to ask about the break even. Like I don't really understand what it means by break even.
Okay, now what we mean by break even is very simple. Okay, let me see, let me use this to, okay, if you have a market and we are selling from here. Okay, now this is our entry. Let's say we enter the market here. Our stop loss is here. Okay, and the market has gotten to this position. Now, break even means what? Bringing your stop loss to your entry. That's all. Do you understand?
Yeah, thanks.
All right. All right. So what else?
Yeah, boss, please, I have another question.
Okay, please.
Okay, what does it mean to, I mean, hearing statements like taking your stop loss to be your take profits. I don't know, like interswapping them.
Stop
Something. I don't
loss
really
is stop.
understand.
Secure your profits, right?
Yes, like I've shifted my stop loss to my take profit, something like that.
It's stop profits, don't take profit, stop profits. Now, I'll explain. Now, this is what it means. You have a market, your entry is here. Come in, please. Your entry is here. Then your stop loss is here. Now, what it means is, okay, for example, Evelyn, that trade you lose, or that trade you lost, or sorry, on I think, was it yesterday or the before yesterday? This is what happened. Now, your stop loss is here, your entry is here, and the market has gone this way. Now, moving stop loss to your stop profit is when you bring your stop loss and secure part of the profits here. That should, in case, sorry, part of the profits here, you put your stop loss here. That should, in case the market what goes back, it will eat your what stop profits, and you won't lose that trade. It means you are trading risk-free. You're trading what? Risk-free. You don't have any risk. You don't have anything to lose.
Bros, please come again, please.
Okay.
Come again a little bit.
Okay, let me make. Sorry about that. Now, this is what I'm trying to say. Now, in the market, if you have your entry at this zone, then you have a stop loss here. And the market has done, let's say the market has done 50 pips. Now, when they tell you, if the market is doing this number of pips, secure your profit. When they say secure your profit, or sorry, if you want to secure your profits, you just have to bring your stop loss to where? And secure part of these profits here. Sure you get. Now, put your stop loss and secure part of the profit that should, in case market wants to retrace back, or market is now buying, market has changed course. Even if it gets to your stop profit, it will eat your stop profit and close your trade in profit, not loss. That means you are trading risk-free. You are not risking anything in the trade. Do you understand now?
Yes,
Yes,
I
I
do.
do. Yes, I
Thank
do.
you very much.
So what other question? So, all right, guys. So above all, what you need to know is that no matter what anybody teaches you, no matter what anybody.
Hello there, can you hear me?
Okay, I can hear you, sir.
Okay, I want to ask a question. When you want to stack, how many positions, like if you're trying to be careful, how many positions do you use? Like your average number of positions you
I'm trying to
use.
be careful, like to be
Yeah,
careful
if you're
to the
trying
last. If the trade is not sure, if I'm guessing the trade, I use 3. But if I'm so fucking sure, I use 10. I've not used 10 before, but I use 6, I use 7. I can stack like that. But if I'm not sure, I use 3. But if I'm just going for a swing, I use 2 positions. A swing, 2 positions. Are you okay with that, sir?
All right, thanks, boss.
So what other questions? Okay, I think that's all. Now, what I'm trying to say is, no matter who your mentor is, no matter what anybody tells you outside, you're still left with the decision. You're still left with the fact that you're the one to make the decisions yourself. So why not just put that time you're taking to pay for signals or for anything? Why not put it inside studying? Put it into studying, mastering your entry and your exit. You don't have to know all the old strategy in the world. If it is Queen of Pips, learn it. If it is structure, master. See, ordinary support and resistance can do wonders in your life. Ordinary support and resistance. You don't like not knowing any other thing. Ordinary support and resistance can do wonders here. Like me, I don't take let me tell you something. There's something I do. I don't like learning people's strategy. Trust me. I stopped a long time ago. I stopped. Because if you haven't mastered one and you keep learning, which one you won't use? The thing when me are the use will not work for you. Why not just take your time and discover that thing that can work for you? That thing that when you use it, you have a lot of winning streak. Then master it. We'll be having our next masterclass some other time, maybe this week. I'll be talking about psychology. Then the next one, we'll be talking about structure as a whole, support and resistance. Then we'll be identifying them and working on charts. I don't know if you would, please, I would need feedback from you guys. How do you see this masterclass? What do you feel?
Bro, it was very good and excellent.
Thank you so much, sir. Thank you so much, sir. It's just five.
It is
just
so
5.
detailed, like it's very much explanatory.
Thank you.
Yes.
Thank you.
And it was an eye opener, to be honest. A big eye opener.
It's like the foundation you should actually have before even going live.
Sir?
I said it's like the foundation that we need before actually,
Yes.
taking trades.
Yes, exactly, sir. Hello, sir. Please, I'm meeting my thing. Yeah. So exactly. So I just feel these are the things we need, because everybody ignore this aspect. Everyone. This is the mistake people do. Everybody just wants to jump into the trade. They ignore this aspect. And if you don't take your time to study all of this, you won't know how to handle yourself when you come close to trading, when you face some certain challenges in the market. Now, our next class, we'll be talking about psychology. Now, when we talk about psychology, we're talking about how to handle losing trades, how to handle those fears, like when you're losing, what to do. Then we're talking about how to handle winning streaks, how to balance your mental health. Me, as I like this, if you see loss, make it go like this. I don't care. Because I know how much I risk. I don't care. If this hits my stop loss, okay, it's $10. If this is my so I'll be like, let me bust a bubble. If I place a trade, I don't even expect to see profit. I'll be like, okay, but she trade me. I'll see $20 loss. That's what I think. Oh, okay, I'll see $30 loss. My mind is made up already. I know how much I'm risking before I go into that trade. I'm not just jumping into any trade. You can't call me. You can't see all the signal you call. I don't trade it. I won't lie to you. I do my thing myself. My setup is not complete. If Konzi does not tell me that, okay, Konzi, Dre, let's work on this, and we do it together. If you just call signal from me, I'm just looking at you. I don't trade it. I don't. So guys, let's just please work on that. I would put this video in the YouTube so we can just